My name is Morton. Joining me for the hour is Ben McKenzie. Ben, I know a lot of people have obviously seen you in Hollywood and doing the TV cop type of positions that you often talk about over time here. But for those who are not familiar with your background, just introduce yourself. Who are you? How'd you get involved in acting? And what turned you onto the cryptocurrency space?
Okay, sure. My full name is Ben McKenzie Shankin, and I grew up in Austin, Texas. Fairly normal childhood. Played high school football opposite Drew Brees, and then I went to the university. That's my highlight from high school. Went to the University of Virginia, where I got a degree in economics and foreign affairs, which is what Virginia calls its international relations degree. I then moved to New York upon graduation to try my hand at acting. I had taken acting classes in college and was sort of avoiding the fate of becoming a lawyer. My father's a lawyer, and I didn't want to do that. So I moved to New York, waited tables, as you do as an actor, and moved in August of 2001. So 9/11 happened only a few weeks after I got there. Difficult time to break into the entertainment business. I ended up in LA the following year, crashing on a friend's floor and trying to get an agent. Basically, long story short, got an audition for a show called The OC, which was a teenage soap opera. I booked it and was off on kind of a wild Hollywood ride, which was pretty surreal for a guy who was, in his early 20s with a college degree playing a teenager on a soap opera. Then I took that and ended up on two other shows, Southland, which as you mentioned, I played a cop a lot. I played a cop on a TV show called Southland, and then most recently Gotham, which was a sort of a Batman prequel focused on Jim Gordon, the young future commissioner. So I did all that. When the pandemic hit, I had a lot of time on my hands and started looking at the markets for the first time in my life. Even though I had this degree in economics, I really hadn't paid much attention. And a friend of mine, Dave Miller from college, decided he said I should buy Bitcoin. And I love Dave. He's a great guy. He's given me the worst financial advice of my life. Probably about 10, 15 years prior, he had encouraged me to invest in a stock, a company that had created synthetic blood, supposedly. And we were going to make a fortune. I lost the money. It seemed like we were a victim of a penny stock pump and dump. And I had avoided the market ever since. So when he came to me saying I should buy Bitcoin, I was skeptical and I started looking at it. My degree in economics was useful. We can start talking about that in a minute. But long story short, I've teamed up with a journalist who are writing a book about crypto and fraud. It's called Easy Money. It'll be out next year. And we're going around the country and the world reporting on that.
All right. So I'm curious in terms of the economics degree, is there anything that you learned from your time in college that was applicable to being an actor, right? Aside from understanding supply and demand, I'm always fascinated how a field of study translates into something which you can argue may have nothing to do with that field of study.
Yeah, that's a good question. I mean, I don't think I'm very grateful that I have a college degree. I was the only one of the young cast members who did. Not so much for any direct application of, the dismal science or foreign affairs. It wasn't something I talked about a lot on set, as most people were interested in other things. But it just gave me perspective. It gave me a perspective on what can be in Hollywood. Hollywood's sort of notorious for sort of chewing people up and spitting them out. You're king one minute and a bum the next. And I think it's good to have a little perspective that, Hollywood's not the end all be all. That there's a lot of other people out there doing a lot of other things. And that's something I've carried with me throughout, where I love what I do, the acting part of it. And I started directing and writing on Gotham as well. But I have other interests. And I think it's, sort of important both psychologically, financially, and otherwise to, not put all your eggs in one basket, so to speak. So I think it's been helpful in that regard.
I'm going to assume that many Hollywood stars either hire a financial advisor or will rely on people they consider to be smart investors for what to do. I'm just curious, in terms of colleagues that you've worked with, how do most tend to think about investing separate from, kind of the glitz and glamour and hopefully big payoffs that come from doing TV shows or movies?
Yeah, that's a good question. I mean, I would say I'm a fairly shy guy. In fact, a lot of actors are actually sort of, introverts. I don't know that I've had a lot of deep dive, substantive conversations with my fellow actors, but I think, it runs the gamut. I think there are some folks who are very smart with their money and either, invest it themselves or sort of look after it closely. There are others who are smart enough to know that they don't know much and they give it over to some smart people who invest for them. And then there are others who are bad with their money, who either spend too much of it or give it to the wrong people to invest for them. So, I think you see my guess is you'd see the full range of the regular sort of general public that happens to come into to some money. You'd see that reflected in Hollywood. Some people are good at it. Some people aren't. I was very cautious. I had my money in real estate mainly, both, the first home that I bought, which I was lucky enough to buy in my 20s at the top of the market, which was quite a lesson for me. And then with investments and stuff, I've kept it pretty safe. I'm a pretty cautious investor generally.
Okay, so let's apply sort of the idea of doing due diligence for a role versus doing due diligence for an investment. So talk us through your journey in terms of trying to better understand Bitcoin, the cryptocurrency space in general, and what is it that, as you were going through that due diligence, made you perhaps most skeptical?
Sure. So I started with the basics. I really had not paid any attention to cryptocurrency prior to 2021. And again, my friend Dave said I should invest in it. And I almost did. I mean, I got an app and I was right at that point where just connect your bank account and you can invest in crypto. And I paused because I didn't know anything. I didn't know which crypto to buy. I wasn't really sure how any of it worked. And so I started asking obvious questions, trying to understand the technology, which felt, extremely dense and kind of difficult to parse. And then I stepped back and said, well, all right, wait a second. I have an econ degree. Let's start with currencies and what currencies are and what they do. And as your listeners probably know, in economics, currencies do three things. They have three functions. They're a medium of exchange. You can buy shit with them. They're a unit of account. You can run your books with them. You can, come up with realistic prices, comparing the prices of two different things. And they're a store of value, meaning their price stays relatively consistent over time. Cryptocurrencies don't do any of those things well. They don't work as a medium of exchange, not just because they haven't been widely adopted, but in terms of Bitcoin, because the underlying technology itself, the proof of work needed to mine the Bitcoin, means that Bitcoin can't scale. It can only process 5 to 7 transactions a second, whereas Visa could process 24,000. So and as a store of value and unit of account, they don't work because the volatility is so large. It's just impossible to work as a currency. Advocates will say, oh, well, over time, that's eventually going to go down, although that hasn't happened yet. And so with all three of those things, they really aren't currencies. So they're misnamed. Not that they were purposefully misnamed. I mean, when the white paper came out in 2008 and the Bitcoin white paper stated that it was going to be a peer-to-peer currency, that was the intention, I think. And at a small level, it could sort of function theoretically because, you wouldn't need it to scale. But as it's gotten bigger, I think it's been shown to not work. And we can talk about, I went to El Salvador where people are trying to use it as a currency, where the government has imposed it as a currency and it's not being used and it's not working there. So instead I asked basically, well, what are they, right? If they're not a currency, then what are they? Well, what do? You put money into them and you expect to make money off of them through no work of your own. But that's an investment contract under American law. That's a security. The 4 prongs of the Howey test, the way you determine securities in this country, are an investment of money in a common enterprise with the expectation of profit to be derived from the efforts of others. Well, that is, I think that fairly describes just about every cryptocurrency. Bitcoin has been classified as a commodity. There's sort of an interesting history there that we're going to try to explain in the book, if it doesn't bore the pants off of our readers. But in terms of the other, 19,000 cryptocurrencies out there, it's pretty difficult for me not to see them as all securities. But what's interesting is that, you're basically selling unregistered, unlicensed securities, right? I mean, we can talk about the SEC and their role in this, but however we got here, where we are now is that there's 20,000 of these things out there. And the public really doesn't have enough information to understand exactly what they're buying when they're investing in these cryptos, right? The disclosure, which is at the core, disclosures at the core of the securities laws in this country, the disclosure just isn't there. You just don't know what you're getting. You don't know who owns the supply, who's controlling it, and you don't know how much market manipulation is going on, which I suspect and have seen in my reporting is probably quite a lot. So people are buying unregistered, unlicensed securities, and that gave me pause and spurred me to want to write a book. So as to sort of explain to the general public and also, potentially warn them of some risks they may not be aware of.
It's interesting that you mentioned that it's misnamed as cryptocurrencies because it's not really, the space doesn't really have the currency elements to it. But I'd actually argue that's part of the branding and marketing, right? Because it sounds safe if you call it as an asset class, the cryptocurrency asset class.
100%.
And I haven't met, right? And I think this is kind of interesting pivot towards a discussion around definitions, right? Because I made this point before, the moment society loses its definition, you lose society because then nobody can properly define anything. Is it security, is it not? Well, if it's very set in its definition, then you have to stick to that definition. It has to be from a legal framework applied in that way. I want to hear your thoughts on the marketing of cryptocurrencies. How do some of the marketing aspects of some of these cryptocurrencies maybe remind you of some scams that I'm sure you see even in the world of Hollywood? Right? It's no different than somebody pitching a script, right? There's some element of fantasy and fiction to it.
That's right. It's a story. Crypto, I think, is most effective as a story. And I've been really fixated on Robert Shiller, the Nobel Prize-winning economist's work, in studying how economic narratives form. An economic narrative it doesn't fall from the sky, come from nowhere. It is usually forms in response to real events. So in the case of crypto, I think the real event that, seemingly precipitated the Bitcoin white paper was the financial crisis, the subprime crisis of 07, 08, and the sort of complete debacle there where the banks and the entire financial system, nearly fell apart and created a lot of, understandable mistrust, both on the left and right. On the left, I would say that became Occupy, and on the right, the Tea Party. And a third thing was born at same time, October of 2008, the Bitcoin white paper came out. And it was a way, this peer-to-peer currency was a way of avoiding these third-party intermediaries, which had so screwed over Americans. There's an understandable backlash there. And I think the promise, the story of crypto and of Bitcoin is quite alluring, right? The notion, who wouldn't want to be able to transact directly with someone else without government getting in your business, without, all this interference, and quite frankly, the cost and the invasion of privacy. So the ideals are quite, I think, interesting, and some of them laudable. The problem is that by the time crypto got big, which, was very small up until at least, let's say, 2016, and really only exploded during the pandemic as people were sitting at home, often quarantined, had a little extra money in their pocket. That's when there was real money to be made in a speculative bubble like you've seen in crypto. And that's when the marketing dollars flowed in a big way. And to your point about, the cryptocurrency word being used to sort of create a compelling narrative, I think that's what's happening, right? You're getting massive marketing campaigns with movie stars and athletes talking about sort of a vague notion of making a bunch of money, vague notions of innovation, of, banking the unbanked and building generational wealth. And, they're telling a bunch of different stories. But the overall story is you're going to be smart, you're going to be ahead of the curve, you're going to make a bunch of money. Schiller calls it a constellation of different stories that form an overall narrative. And I think that's really what happened in 2021. And I think language is crucially important. Words are a tool, but to your point, if the words have no meaning, that's literally nonsense. You're speaking nonsense. And I think that's sort of where we got to at the height of the mania, was crypto was going to, or blockchain was going to, cure cancer and also make everyone rich and address all these societal ills. When in fact, what it was really doing was, feeding into a bubble that has now burst, and most people have lost money.
Yeah, and it is. I mean, I was seeing a lot of that early last year in terms of the laser eyes that were all over Twitter, and how you had athletes having it on, and Paris Hilton, and to the point where Matt Damon himself was in a commercial around this. And it's interesting to me that, speaking about definitions, all of that to me at the time seemed very clearly like a form of financial advice. So you had influencers basically playing the role of fiduciary without having the fiduciary legal standard, and people got sucked into it in a really remarkable way. And I always go back to this point that the problem from my vantage point, isn't the technology. The problem is the narrative, the overconfidence, which creates the leverage, which then counters all the narratives around inflation hedge, store of value, so on and so forth. So, yeah, you might have something that is finite in supply by code, but you can just do a whole bunch of new codes that basically get people sucked into the story as opposed to the reality.
Yeah, I mean, and scarcity does not equal value, right? Like I could collect all the horse shit in the world, and is it valuable? There's only so much of it, right? There's only so many horses, and there's only so much poop that they put out. But just being scarce, and even in the case of Bitcoin, I mean, yes, 21 million, right, can never be mined, but there's the catch of 51% attack and all that stuff. But again, when you talk about cryptocurrencies and you get away from the word currency and into how they actually work as I believe as securities, as investments, they're very strange investments because most securities, there's a revenue stream, right? I mean, if you think of a stock, then, what are you buying? Well, yeah, you're buying a shared delusion of, you could be buying stocks used to issue these things called dividends. You might be buying actual physical money, but you're buying, at this point, you're usually buying into the dream of the appreciation of the stock over time, which is related to the fact that there is a revenue stream that these companies actually make things usually or provide services. And you can discount that and you can, make a calculation and compare them to other revenue streams, and therefore the value, the price has some bearing or relation to its value. With cryptos, there's no revenue stream, right? They don't do anything. I think people are they're getting led into this notion that they're going to revolutionize everything, but it's very unclear as to how they're going to revolutionize everything. Right now, the way cryptos work is that, for the general public, they, go to a website or download an app and they connect their bank account and they buy some crypto and they gamble with it or buy it and hodl it, hope that goes up in value. But the cryptos themselves don't really do anything. So it's very, as an economist or as an armchair economist, amateur economist, it's very difficult to understand exactly what their value is, except as basically an example of the greater fool theory that, you can, if someone else is willing to buy it for more, you can sell it to them. But the danger there is that if you mistime it, you become the fool yourself. And I think that's, what happened in 2021 is everybody rushed into it. But as it starts to come unwound here, we realize that, there's basically nobody to sell it to. Nobody's buying it anymore.
Let's go to some of the audience. I'll answer that real quick. Somebody once said to me, which was an interesting point, that I think there was a legal case, Ben. I mean, probably may have seen this already, or maybe it's being addressed at some point in the book. But there was a legal case that basically argued that code is a form of speech.
Right.
So yeah, let's talk about that because I think it's an interesting dynamic in terms of the interplay of the legalities of the technology and where we are.
Yeah, I mean, I'm not a lawyer, so I can't speak to the intricacies very well. I think so I'll speak sort of more generally about what I'm noticing, which is, again, getting back to narratives and I would argue potentially fraud or at least deception. There's a narrative that's formed that the blockchain can fix all of the, you create this immutable ledger and therefore, you can kind of replace a lot of existing law or create a digital record that could follow the law. I think what's really happening for the most part is people are being sold on that. And then when it actually meets the law, when you actually get in front of a judge who's trying to determine exactly what these property rights are, the judge is following the actual law as written down and the precedents that's been set previous cases. So often what I'm afraid crypto buyers are finding is that they don't have the rights they thought they did, in the sense that they were told that, an NFT is, this unique thing where, it's kind of like you bought a receipt for a JPEG. I mean, I don't want to get too cute with it, but it's a very elaborate and sort of clunky way of addressing, property rights issues, which I do know somewhat about that. My brother is a lawyer for one of the studios and comes from an intellectual property background. That law is messy, but there's decades and decades of it built up. At this point, they're not going to just like throw that out to glom onto some new supposedly innovative technology of blockchain. I'm extremely skeptical about blockchain really fixing that stuff or changing it much, but I'm open to the other arguments.
I love that, by the way. It's like it's a centralization of narrative on a decentralized technology.
Yeah, no, absolutely. And I think, your example, sir, is quite apt. I mean, DCG is one of the biggest players in the crypto industry, and they own it's their own media outlet. Now, I think there are some good reporters there, but there's also a lot of stuff that certainly looks like propaganda. And it's difficult to separate out. I mean, if the Wall Street Journal owned the companies that it was reporting on, that would be a conflict of interest, right? Crypto is rife with conflicts of interest across the board. Not to single out DCG, but for example, Jacob and I, my colleague who's writing the book with me, we wrote an article about Binance, which is the largest crypto exchange by spot volume by a country mile. I don't know if this is still true, but at the time we wrote the article this spring, Binance had the spot volume of all of the other exchanges combined. Huge player. And conflicts of interest were just rampant there. They are their exchange, their own broker dealer, their own clearinghouse. They operate their own clearinghouse, and they trade on their own exchange or traded on their own exchange. That's just, that's not allowed in regulated markets for obvious reasons. And you see that just everywhere in crypto. I mean, it's been interesting to watch as the collapse happened, particularly the collapse of Terra Luna and 3AC and now Celsius and Voyager and BlockFi. You see just how many relationships there are between the bigger players. They're often like lending and borrowing from the same place. And so it gets very convoluted. And I have to say, just on a sort of ironic humor note, it's quite funny that this thing that was created to address the over-leveraged system of the subprime that precipitated the subprime crisis has now effectively recreated that over-leveraged system that has then, now collapsed or is seemingly collapsing as we speak. It's quite funny that it sort of did that, but of course it did it in a completely unregulated way where I'm afraid that the average Joe, the consumer, is sort of the last person on the minds of these companies and the last person that's going to be addressed potentially in bankruptcy courts, and just as the way our bankruptcy laws work. So, yeah, it's pretty rough, man. I mean, I don't want to say the whole thing's it's not that everyone intended for it to be a scam. I don't think that was the intention of most folks, but studying it economically and studying it in terms of the market structure, it's difficult. It looks an awful lot like in the aggregate, like an MLM, multi-level marketing scheme, or a Ponzi. Very pyramid schedule. They're a pyramid structure.
Let me reset the room real quick for those that are here. Everyone here, please make sure you follow him on Twitter and obviously look out for his book when it's published. So, Ben, this is something that's bothered me for a little bit of time here. And I'm going to relate it a little bit to the Fire Festival, where the way that the Fire Festival, the way that it got viral is, I think it was in a single day, a whole bunch of influencers on their Instagram put up some kind of like colorful post. Everyone did it at the same time, and then everyone started talking about fire. What happened last year that seemingly out of nowhere, almost every single celebrity suddenly had laser eyes and was talking about cryptocurrencies almost as a means of being cool? Was there some kind of, I don't know, some kind of concentrated effort were they being reached out to by different entities? Because it's like out of nowhere, suddenly it became the popular thing to hype.
Yeah. I mean, I think, so Robert Shiller refers to naturally occurring Ponzi's, which is basically, the price of something starts to go up. And, there's usually a story attached. Crypto is going to, revolutionize finance. It's going to change the world. It's going to solve all these problems. And the story takes off. And as the price goes up, more and more people start to bet on it. More people start to speculate. And that feeds the price again and again and again. And these things kind of take on a life of their own. Now, eventually they collapse if there's no there. And in terms of a Ponzi, you're Your main issue is getting your money out once it's starting to go down. Because I've been reading a lot about fraud and Ponzi's. One of the things that we think about when we think about we usually define Ponzi's as, well, you need new money to come in to replace the old money to pay out original investors. And that's true. But if you define Ponzi that broadly, then kind of all revolving credit could be considered a Ponzi, right? Under some circumstances, Social Security might be considered a Ponzi, things like that. The real distinguishing factor for a Ponzi that Dan Davies, who wrote a book, Lying for Money. The thing that Dan, which is a great book about fraud and really studying how the business models of fraud really work. The thing that you need to do in order to run a fraud for a long period of time is you need to control the redemption process. You need to make sure that not too many people are trying to get their money out at any one time. Because if they all try to get their money out at one time, or enough of them try to get it out, they won't be able to because the money's not there.
It's effectively the bank run, like what you see in It's a Wonderful Life.
Yes.
Right?
And so, for example, what took down Bernie Madoff? Bernie Madoff was able to run his Ponzi for decades because he created it's sort of the antithesis of crypto, which is everywhere and everyone can buy it. With him, it was like, no, you needed to know Bernie or play golf with him, or you needed to know the right people. And it became this thing where, he was very smart. He didn't say it's going to make you 100% a year. He said, whatever it was, 10, 12%, he would vary it every year a little bit. And there was a trust built up where they just figured as long as they kept it in, they were good and they were going to make a little bit each year. What took Bernie down was the financial crisis, right? All of a sudden, it wasn't due to him. Everyone just saw the market tanking and said, hey, I want to take a little money off the table. Well, the money wasn't there. Right? I mean, he said it was 64 billion, but they only found 17. Crypto, it's not the same Ponzi as Madoff is running, obviously. It's more like what Schiller is talking about, which is these naturally occurring Ponzi's where you don't need a Charles Ponzi himself or a Bernie Madoff himself. You don't need one person running the whole thing, but the effect is similar, right? The thing that's just wildly inflated, and there's just not enough real money backing it. I mean, that's why you're seeing all these companies go bust is, they create the fake monies, but the real money in there, in terms of the actual money that's been put in there, as by investors, it isn't there. It's not the same. There's a ton of leverage being used. And there's also shenanigans going on, most likely behind the scenes as well. But, that's another chapter later in this story as we see, who gets caught doing what. But at the minimum, there's a ton of speculation. So when people try to go get their money out, all of a sudden the exchange is shut down and they can't get it out.
You're hitting on exactly what my frustration has been, right? It's just, you have to define things properly. It's an investment with risk. Maybe Bitcoin will be bigger. Maybe it's not going to be bigger. Maybe something else will overtake it. Maybe not. But to me, Ben, the question is always, and this is, I think, the ultimate antidote towards how to not get sucked into a fraud is not about what you're owning, but how much you own of it, right? My contention is always about the weighting in a portfolio, right? Because you don't know if something's ultimately going to be system replacing in terms of what's fiat or not, but don't be overly convinced on it, because if you're overly convinced on it and it happens to be a fraud, well, now, it's a much bigger problem for you.
Yeah, we're going to write about that. I mean, I think you're absolutely right. In terms of economics, the argument I'd make is that you're 100% correct. This is gambling, and I'm not. Before I got married and had kids, I like to play cards. I'd play a little Hold'em, and in low stakes, wouldn't gamble too much money, but I enjoyed it for entertainment value. But these cryptos are much more akin to gambling than they are to any investment, and the reason they're not really an investment is that there's no product, there's no underlying utility, right? There's no revenue stream, there's no goods and services being produced. And so they're zero sum, right? At best. For someone to win, and they're strictly competitive. For someone to win, someone else has to lose. And that's before you get into the fraud, right? That's before you get into, and they're also ripping you off, right? And so, I think your point is well taken. There's a joke in the crypto skeptic community is like, when did you lose your money in crypto? When you gave it over to the casino, right? I mean, when you put it in, it might go up, it might go down, but even when it goes up, you still got to get it out. Yeah. No, they literally do that. I mean, via via their web portals the article that Jacob and I wrote for the Washington Post on Binance when the crash of May 19th happened last year, when Bitcoin plunged from like 40,000 to 30,000 a coin in like a few minutes. They shut the doors to the casino. And we looked at two guys across the world, one guy in Canada who was, let's see, that guy was long, and there was a guy in Australia who was short. And the guy who was long, watching the price go, he was trying to get out desperately. Well, the app didn't work, right? It just shut down. And then the guy who was short, he was just trying to cash out at a certain point because he'd made a bunch of money, at least on paper. Well, by the time the app got back up and running and the price had leveled out, the guy who was long was just immediately liquidated. There was no margin call. He's gone. He had built up a stack of, I believe it was like $9 or $10 million supposedly worth of Ethereum. He's a former Uber driver. He was like a regular guy who thought he made a fortune, and he lost it all through no fault of his own, I would argue, or at least not much of a fault. I mean, he literally couldn't get the thing didn't work. And then the guy who was short also lost. The guy who was short at the time the app started working, the price had leveled back up, and he was down to almost nothing, and he eventually lost it all. So he had, I think on paper he took taken $20,000 or $30,000 and turned it into 150 or 200 or something, but he didn't get any money either. And I just think that's such a great example of like you're not playing cards in an honest casino, right? I mean, most of the volume in crypto runs through the overseas exchanges. It doesn't run through even US based exchanges. Binance has famously no headquarters. It's just not headquartered anywhere. And you got to ask yourself, just commonsensically, like practically speaking, when you connect your bank account to somewhere which is run through some shell corporation in the Caribbean, who are you giving your money to? And what's the guarantee that you get any of it back, even if you win? And I think it's been a real painful education for folks on that.
And by the way, I will say also, I don't know if we're going to have time to hit on this, but for whatever it's worth, I partially blame Twitter for the losses in the sense that it was very clear last year there were tremendous number of fake accounts, bots that were literally just pushing copy out to get people hyped, right? I mean, there is this interesting dynamic, I think, where it created such manipulated emotion that it ended up being the precursor to severe losses.
Great one. Well, one of them happened on Twitter with me. I mean, I guess it wasn't undisclosed, I guess, because it was happening out in the open. But, a few weeks ago, I think it was some NFT thing, and someone had tweeted at me or something, and you get these things, right? Like, check out our NFT collection or whatever it is. And I just wrote back, very obviously joking, yeah, what's my cut? What do I get out of it? And the guy's like, well, we'll give you one for free. And, that stuff, we haven't spent a lot of time on NFTs and undisclosed financial relationships, but my guess is it's rampant. I mean, it's just rampant. Some people have actually done this. There's a guy, he goes by Dirty Bubble Media on Twitter. I recommend following him. He's got a Substack. And he looked at Justin Bieber's quote unquote purchase of an NFT, and his contention is, by tracing it on the blockchain, that Bieber, probably did not buy that NFT. And my guess is, having spent time in Hollywood, my guess is that's probably pervasive. Some celebrities, I'm sure, have bought NFTs, but my guess is, an NFT company approaches a major Hollywood agency or a management company with access to talent and says, hey, we got this thing. We're all going to make a ton of money. All you got to do is promote it. All you got to do is go out there and talk about how great it is. And you never really talk about whether you bought it or how much you bought it for, or maybe you imply that you bought it or whatever. But it's really a shame because, when you're talking about NFTs in particular, there's an enormous amount of wash trading going on. I mean, NFT marketplace just rife with wash trading. And so the purported value of these things is, it's just impossible to determine. I mean, my guess is that most of it, when it all shakes out, is going to be almost nothing, because what can you even do with these NFTs, right? I mean, I'm an artist, so I'm in favor of supporting other artists, and digital artists can be cool, I think. But if you're just buying basically a receipt for a JPEG, I'm skeptical that, you're going to get much of anything out of it, except, maybe you're going to be able to change your Twitter profile picture, and you're going to be able to, maybe sell it to somebody else who might buy it off of you, but I wouldn't recommend it as a long-term investing strategy. A lot of potential fraud there.
So Ben, I know you got to hop here. Everyone here, please make sure you follow Ben McKenzie. As you can tell, not only a great actor, but very thoughtful in the way that he's bringing light to a lot of these issues, which now people are starting to realize. But Ben was early on in identifying a lot of the fraud in the space. Ben, really do appreciate your knowledge, you spending the time here, and hopefully we'll have you back when your book is out.
Would love that. Thank you so much, Mike. Appreciate it.
Thank you, everybody. Cheers.